please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, the market's not going one way, and I think that should be a relief because, too often now, at least last couple of days, we've seen a small cut suddenly become bigger and then it starts to trend in one direction. So we slipped into the red, but now we're back about 9 points higher. So let's watch this space closely. We spoke with Ashburton earlier on, the opinion from Ashburton remains optimistic on India, though they believe that macros have taken a turn for the worse recently. Let's listen in to what the opinion is coming in.
I guess versus other emerging markets, India has been, quite frankly, underperforming for some time. I think, obviously, the China-related factors have been clearly keeping most commodity complexes and the energy prices reasonably buoyant, which has certainly helped some of the other emerging markets that are more geared into those sort of prices. More recently, however, there's no doubt the macro situation on India on a relative basis has certainly taken, in the short term, a turn for the worse. Obviously, concerns over the budget that we saw, which I guess were neither too hot or neither too cold, I guess, in most people's opinion. And then obviously more recently, this fraud case sort of adds to the worries over the recovery in the crucial PSU space in the banking sector. But we're still very, very much overweight India. I think, we go through these phases from time to time where things do look a little bit bleaker. We're still very optimistic on a medium to longer term. I'm not sure a full-on bear market correction is warranted just yet for where we are in the cycle, but certainly a decent correction, I think, would certainly make, from an investing perspective, there's a lot of counters there that they look quite pricey, and we've been following them for some time, waiting for opportunities to get in. So, we wouldn't worry too much about a correction, but I don't think we'll get a massive one.
Okay, let's get Ashwini into the conversation. Ashwini, good morning. Good to have you back here. So the market's dithering again, red and green. Going to become a sort of deeper move today, you think?
See, we've had 2 days of total washout. Now, any market, if you sell it like that, the buying volume evaporates. So what you need, even if you have to sell, is some sort of buying to come back. And I would think that we are at the point where a bigger pullback is getting engineered, and at some point it will happen. So possibly the trade to take right now is to put a stop below yesterday's low and to get long on the market. Because if you start getting a little bit of confidence and a little bit of buying, the number of shorts are so high that it will lead to a fairly strong move on the upside. I don't think immediately there is great value in taking fresh short positions because the market is totally biased on one side, and generally it's time to take the other side once there is complacency on the short side or on the long side. So having said that, we have long positions on Bank Nifty, and I believe that at some point in the afternoon, etc., we should have another attempt of a pullback which will be bigger than yesterday and today. So having said that, Infosys is a buy with a stop of 1130, target of 1200. Apollo Tyre is a buy with a stop of 256, target of 272. And Arvind is a buy with a stop of 388, target of 410.
Okay, Ashwini, what would you recommend, say, on something like a Tata Steel, which is bouncing back today, and even something like an Aurobindo?
See, metals basically they are following more of global cues and global prices, etc. Tata Steel, whenever there's an acquisition that happens, those stocks tend to underperform. So right now you want to be in a stock that is not doing any acquisition, if there is a stock like that. But Tata Steel, you would like to buy, say, maybe closer to the 600, 620 zone. I don't think Tata Steel is a strong buy right now. On Aurobindo, pharma, again, not very strong for the last few days. Aurobindo is in fact trading below its 200-day moving average. Again, if you remember, it had bounced back post those results from about 500. So maybe it's heading there. So if you get Aurobindo closer to 500, 520, I think that would be a good zone to accumulate it.
You want to take a shot at Fortis, Ashwini?
See, Fortis, I don't think the downside is too great. The upside may or may not be, what people think, because, you don't know how much money has been taken out, etc., what legal cases. So this is, can of worms. So anybody who can deal with can of worms should only enter.
Okay, all right, fair enough, Ashwini. We have a couple of Twitter queries for you now. First up, Vicky, 10,000 shares of Trident at 90 and wants to know if he should average at the current price.
See, I think that time of buying 10 and 50,000 shares of a small stock are probably gone. And if there's one thing that's looking good, that's IT. So mid-cap IT, Sonata Software, Tata Elxsi, etc., Hexaware, 8K Miles, those are the stocks to be with. I think Trident is not looking good enough to hold on further.
Okay, we have another one. This is Prashant, who wants to know if Yes Bank is a good buy at current price levels. Ashwini.
See, obviously, there is collateral damage in financials. So the right way to buy stuff is that you accumulate 50% here and be ready to deploy another 50% if the stock falls further, or if it rises and gets above its 200-day moving average, above 330, then even there you should be willing to put in that other 50%. So you have a foot in the door, but don't enter all at once, because there could be further declines, and maybe keeping your 50% gunpowder dry would be a good idea.
Welcome back. Well, on to one of the biggest global market voices. We caught up with the emerging market guru, Mark Mobius, and he believes India will surpass China in terms of growth. On this sectoral front, he believes Indian banks will continue to thrive and strive ahead. Let's listen in to all of that opinion.
It's possible to have more correction. You must remember that not only India, but the U.S. market and many other markets around the world, particularly the developed markets in Europe and the U.S., have reached high points. On a historical basis, there is reason to believe that you're going to have corrections from these very high levels that we're seeing now. The interesting thing about the developments now is that with the U.S. dollar getting weaker, emerging markets are looking pretty good. But of course, they would be affected if there's a significant downturn. And I believe that the benefits that the reforms already implemented have had on the society as a whole will be reinforcing the need for more such reforms. So we're very positive about India, as you know. We think India is now on the takeoff stage and will probably surpass China in terms of growth going forward. The banks are going to continue to survive and thrive, and I would focus on those banks that are improving their digital offering, because as you know, there are incredible improvements being made in the digital side, and the government's efforts, by the way, this is one government reform that's been very, very beneficial in setting up this payment system on a national basis. Is going to be incredible boost for banks who, and this is the big who, will be able to utilize that advantage.
All right, Mark Mobius, the emerging market guru, opining on the current state we are in, not just in India, but around the world. We've got, the market, which is essentially back to where it started at 11 o'clock. So we started with about a 20-point gain. We're up 20 after dipping into the negative. So things are coming back up. a little bit. Let's put up Aurobindo Pharma, on which I think there is news flow, and who better than Ekta to address it? I think inspections news again, Ekta?
Well, yes, I just want to highlight this, that the unit for injectables and ophthalmology plant was going to get inspected as per the management. It was a scheduled re-inspection, and that was announced in the Q3 conference call. So that took place last week. Basically, the unit 4 inspection started last week as per my sources, and that is expected to continue into this week as well, but it's expected to probably close, and there are some sources telling me that it could close as early as even today and tomorrow. Now, just to put things into perspective, it is a scheduled inspection, but there is a lot of emphasis on this particular plant because it's a very important plant for Aurobindo. It is an injectables as well as an ophthalmology plant. It has a total of 89 filings from this particular unit, with 50 approved drugs as well as 37 pending approvals from this particular unit. Remember that the US is around 45% of sales for Aurobindo. But why is this important in terms of the context of the inspection is simply because they had got inspected all the way back in April of 2017, where they had received 7 observations for that particular inspection. Eventually, we know, or there were sources indicating that that the company had received an EIR, Establishment Inspection Report, for that particular plant. But there have been 3 recalls which have taken place as well. So the management clearly said this on the conference call, that 1 recall was addressed, but 2 of the recalls were being addressed from this particular unit. So if you have recalls, the US FDA is going to look into that. Plus, you have a scheduled inspection for an injectables and ophthalmology facility that's much more, particular in terms of an inspection, simply because you're dealing with injectables as well as something that you directly put into your eye. So that would be something that the street would be watching out for quite closely. As of now, we know that the inspection is probably going to close this week.
Okay, so we'll keep you abreast of what's the latest on that front. Ekta, thanks very much. There's news on PNB, and not good, unfortunately. Moody's is placing PNB's rating under review for a downgrade. That is the comment coming in. Maybe we should put in a phone call to the Moody's analyst on this in terms of how they're thinking about it. Likely impact of fraud, the key trigger for PNB downgrade. Rating agencies over the years have got a lot of flack for being late on arrival, on many issues, but probably this is not one of those issues, because here there is fraud involved, which is and the way it was done, it was hard to detect, let alone for a rating agency too. But as I said, we'll try and get in touch with Moody's. Things are not being held. We were up 20, we're up about 13 now. So 10,392, which is where the market's at. TV Sandeep Reddy is Managing Director at Gayatri Projects. He's joining us on the phone line right now. Yesterday afternoon, they announced that they basically are reorganizing their energy investments in their wholly owned subsidiary. Mr. Reddy, thanks very much. Could you first of all explain the reorganization?
Yeah, basically, as you know, we have 2 thermal projects totaling 2,650 megawatts, which the one project which has a PPA would be the major company, which is now changed as Sembcorp Energy India Limited. And the second project is going to become a 100% subsidiary of the first project. And also, Sembcorp has a large green portfolio, nearly 1,400 megawatts of wind assets all over the country, which they acquired a few years back from IDFC Private Equity, which that is also going to become the 100% subsidiary of TPCIL, our main company, which is now renamed as SEIL, Sembcorp Energy India Limited.
These assets, so this is, it affects 2650 megawatts of thermal energy, essentially, energy projects,
2650 megawatts of thermal energy with 1450 and nearly 1700 megawatts of wind assets together.
Okay, just to
become one consolidated portfolio now.
In which Gayatri Projects, the listed entity, will own how much?
Gayatri Projects, actually through its subsidiary, 100% subsidiary Gayatri Energy Ventures, will now own, after the reorganization, about 6 point some odd percent for the investment what we have made, and also we have a call option to increase up to nearly 12%.
Okay. As part of this transaction,
we paid up to call option from Sembcorp to either 1 month before any proposed IPO or up to 2021.
As part of this transaction, has there been any sort of change of cash? I mean, cash has changed hands. Anything is? I mean, how?
Not at all. There is no cash at all. It's just reorganizing the whole thing, making more efficient. See, because basically the thermal portfolio, which is having PPA, we're going to have a lot of free cash flow in the next couple of years. So that cash flow will be used for reinvesting in the green infra, because I think even a few days back, we won 300 megawatts in the SE's auction. So these, the government wants to increase wind huge in the next 2 years. So we'll be participating in most of the auctions. So most of the growth of these entities will now come from green power, which will be funded partly by the surplus money which comes out of the thermal assets. Okay.
Sandeep, would there be a listing, an eventual listing of this business?
The listing is always on the radar, depending on the market conditions, ultimately for future growth.
And when would you probably target it by?
I think still nothing else is finalized yet.
Okay, all right, Sandeep.
But we have a time up to 2021 to increase our stake up to 12.5%.
So could it be after that or before that? Is there?
No, it could happen anytime, right? If it happens after 21, that'll be 12%. If it happens before that, normally the option agreements fall off before any listing. Okay. So I have an option up to based on evaluations, actually.
Okay, all right. Well, Alka Anbrasu, the Vice President, Financial Institution Group at Moody's, joins in to talk about them placing PNB's ratings under review for a downgrade. So, Alka, just take us through the rationale then. Obviously, this is the likely impact of the fraud, but what is the kind of math that you've done in order to, when you reviewed your status on PNB?
Sure. So we have placed the ratings under review for downgrade because we think that the financial implications of this fraudulent transaction could be quite severe, and that would depend on the quantum and timing of the hit that PNB will need to take. So this exposure, which is about $1.8 billion, as of now, we are assuming that PNB will need to provide for a large proportion of this exposure, but the quantum and timing, perhaps the regulator will also have to dictate to the bank. And depending on the provisions the bank takes, its capital position could also come under pressure. And hence, we have placed the ratings under review. And in the review process, we would take into account the financial implications of this transaction, any punitive actions from the regulator, and any actions that the management team takes up to shore up its capital position once again.
What is your sense in terms of downgrading other PSU banks as and when more details emerge? Have you looked into that risk as well?
Sure. So we have considered the risk of this type of transactions emerging with the other banks. It may not just be restricted to public sector banks, or if a cash flow issues in this particular sector flowing into the financial position of other banks. But at the moment, we have only taken into account this particular disclosure that Punjab National Bank has made, and particularly because this relates to a fraudulent transaction. But as and when and if there are any more repercussions, we will need to review the ratings of other banks as well.
Okay, all right, fair enough, Alka. We've completely run out of time, but thank you very much for joining in with that brief take, and maybe we can touch base with you for a more detailed interview. But with that, it's a wrap on Trading Hours.